Greetings, everybody. This is Robert Dutton with Chicagoland Real Estate. This is the week of September. Well, today we're recording on Friday, September 8th, 2017, and I have a special guest today. My guest is Kelly Stone from Rising Point Solutions. Kelly, say hello to everyone.
Hello, everyone.
Kelly is myself and a bunch of other loan officers from my office. We met Kelly probably, about a year and a half ago, Kelly, something like that. And Kelly's one of our most trusted colleagues and partners, and she helps out a lot of our clients that have credit issues, and she's always available to answer questions about credit. And I will say something right now that I'm pretty confident in saying, that I think that credit, not just in the real estate business, but in all markets, I think credit is probably the most misinformed thing that affects everybody. I mean, I can't tell you how many times people come to me, Kelly, and they think that they know how to attain good credit, and they absolutely shoot themselves in the foot because they don't have the right information.
I think that's hilarious because I have to agree.
Yeah.
I talk to people all the time, and they'll go through and they'll pay something, or they'll take an action that they think is going to take them in the right step, and it ends up, it's 5 steps backwards.
Mm-hmm.
So it's a lot of misinformation,
Yeah.
and the credit bureaus don't provide the information. It's not easily available. There's a lot of misinformation online. So you can Google credit and get millions of pages, it seems.
I've always wondered if that's kind of on purpose, because it seems like if I want somebody to be able to play a game the right way, I'm going to teach them the rules.
Yeah.
And the rules are not taught to the public. The top 3, and I talked about this last week in my podcast, and I used it as one of my top 5 myths of, buying real estate. And one of the myths is that, if you pull my credit too many times, my score is going to go down. And what I always tell people is, if an inquiry on your credit is going to make or break you being able to qualify for a mortgage loan, we got a lot bigger problems on that credit report to deal with. So,
yes.
But everybody thinks that, oh my God, if somebody pulls my credit, it's automatically going to drop my score. That's not true.
Right.
And a lot of other people, they think that just because they have good credit, or just because they pay their bills on time, they think that that's an automatic, paved road on the way to a perfect credit score. And that's also not true.
Right.
There's a lot that goes into that. And I'm going to kind of lead right into everything that's going on right now, depending on when you guys are listening to this podcast. We recently had a breach with, what is it, like 50%?
It's 50% of Americans for Equifax.
Good grief. And Equifax is one of the 3 major reporting bureaus,
That's
right?
correct, yes.
So, if you're listening to this, look to your left and look to your right, and odds are, whoever else is in that room with you, one of you has been affected by this breach. I know I just looked up my social and my name before I plugged in and started, recording this podcast, and I'm affected.
I'm affected. My husband, my sister, my parents, her husband.
Good Lord.
Everybody that I know has been affected by this.
This is scary stuff, guys. We live in a wonderful time in history, and we also live in a scary time because the world is so much smaller than it's ever been before. I can pick up my smartphone and buy something from somebody in Japan right now.
That's right.
So I guess with the ease of, I don't know, what's the right term, Kelly? The ease of technology now.
The ease of access.
Yes.
It's insane.
You're exposing yourself to not only, all these legitimate businesses where we buy goods and services, Amazon, eBay, Uber, all these things that are, we've kind of become accustomed to. I'm leaning back in my chair like I'm on vacation. I should be talking closer to the microphone here. But, we're so accustomed to all these things, and
instant gratification as well.
That's a good term
Everything.
for it, yeah. But the problem is that you guys, there's a lot of people out there that are trying to stay one step ahead of all of it and try to capture all this data that's flying through the airwaves. And if they got 50% of the American public,
the U.S. population, it's 50%. And let's put this in perspective. First off, if you're in a room with 10 people, at least 50% are going to be having issues. And Experian, so the other E for the 3 credit bureaus, so there's TransUnion, Experian, and Equifax. Equifax is the current one that was affected. The breach started in May, and they didn't catch it until the end of July, and they've stopped it, but they waited 6 weeks to provide this information to the consumer. That's huge. That's a lot of information. 2 years ago, Experian had a breach. They had 15 million. Right now, this is 9.5 times more people that are affected than it was 2 years ago.
So there was a 6-week span where apparently they knew about this, and then were they scrambling behind the scenes trying to fix it?
Wouldn't you? Absolutely.
6 weeks is a long time. You can get married, divorced, and develop a really good or bad habit in 6 weeks, can't you?
I mean. And so if anybody's experiencing this, this is just one key to start looking out for. If your passwords aren't working on any login, you need to start changing things immediately. I had an issue just a week or 2 weeks ago with my Apple ID. For my iCloud, iTunes, everything was locked out, and they said I needed to go through a security feature to get the information back.
That terrifies me to my core. Not that somebody would get my information, but the fact that I would have to change all my passwords. I am horrible with remembering passwords and usernames and all that. And I actually, I have an assistant now that I kind of have put in charge of that. And I love her to pieces because that is my saving grace. Whenever I have a lot of different devices. I have my desktop at work, my laptop here, my smartphone, my computer at home. So constantly trying to keep track of all these usernames and passwords is bananas. But,
you could get secure apps to keep track. But that's, again, another thing. I mean, the Equifax was supposed to be secure. Here's the thing is that the 3 credit bureaus, all they do is they collect and sell consumer information. Yeah. And so what's affected right now is not only your social security number, your date of birth, your home address. To me, that's personally scary enough. Absolutely. So if somebody's trying to get your information online, they have all of this about you. There are websites that you can look up somebody's phone number just with their name and their address. So you go to log into your account, and let's say it's got an extra security feature, quote-unquote security feature. I'm using air quotes.
If you guys didn't see the air quotes.
If you didn't see my air quotes, security feature, with them having your phone number and they're going to send you a text message, they can put your phone number in there. Oh. And it's scary to think about all the things that can be changed. So also your driver's license number. And for those people that are currently working on their credit or trying to better themselves, the disputes were affected too.
Oh, wow.
Yeah.
In what way?
182,000 consumer disputes were lost.
So if you challenge the Equifax on some kind of, say if you had a family member who shares a name with you or a similar name, say if they defaulted on a car loan and it got reported to your credit and you're in the middle of disputing that dispute went away.
182,000 of them did.
Good Lord. Now, keep in mind, guys, that everyone out there that's listening to this, we're not trying to scare you. But what we are trying to do is inform you more than what you're going to hear on some kind of press release or some kind of, because everyone has their own agenda. And I will tell you my agenda right up front. My agenda is to put you into a house. That's how I feed my family. Kelly's agenda is to strengthen your credit. Yes. And she works with people with credit issues. She works with people with good credit that want better credit. And Kelly is an expert at trying to get you the best credit score and the best credit health possible. Is that accurate? Yeah.
It's really about education. It's trying to go against all the misinformation that's out there. Yeah. I could dive into so much, but one thing that I hear all the time is, but I paid this account. Why is it not positively reflecting? We are so trained to think that paid equals positive, and that's not always going to be the case when it comes to your credit. It really depends on the age, what kind of account it is. If it's been 5 years since you paid on it, but it was only $100. I just thought I'd take care of it.
Let sleeping dogs lie, folks.
Yeah. Don't wake the sleeping baby. Yeah. Sometimes you want to get some advice before you make a dive and start throwing money at things.
And all this is very big and grandiose. A lot of this is, you think to yourself, well, all these people have all this access to my information. How am I ever going to be safe? And it's always smart to keep an eye on your credit and make
Yeah.
sure that things on there are reporting accurately. And these things are run by humans. Humans make mistakes. Obviously, some humans, and they allow breaches of half the population to happen. And I laugh because I don't want to cry about it. It's definitely scary. Credit is not my whole industry, but it's a very big part. There's nobody that comes into my office that tries to apply or applies for a home loan and their credit is not looked at. Now, it's not the only factor,
right?
But it's one of those things without having. I mean, I just recently talked to a woman that is a complete credit ghost. She's in her 40s, and she has no credit score, no credit history, nothing. And now she wants to make the largest purchase she's ever going to make in her life, and unfortunately, she can't. I mean, there's no. Even if you have bad credit, they have some way of tracking how you've paid your bills or how you've not paid your bills.
Because that's what it is. That's all a credit report and a credit score are. They're trying to assess your ability to make a payment on time. They don't. It's not like a punishment. Oh, I have bad credit. No, that's not it. If I'm going to lend you $100, I want to know that I'm going to get that $100 back. If a bank's going to lend you $200,000, they want to make sure that they are going to get that money back.
Yes.
So they want to see, can you pay on time? If I lend you this money, you're going to pay it back. Okay, it's great you paid everything with cash. So up until this point in your life, you've been able to show, I'm good with bills. I pay everything on time. I don't go beyond my means. Well, now you're going beyond your means by borrowing that large sum of money. So they want to make sure that you can pay it back.
And I think I know what some of you out there are thinking. What I've heard people say in the past is that, oh, well, the bank doesn't care if I stop paying them. They want to foreclose on my house anyway. That is one of the largest misconceptions in the industry. Banks are not in the business of selling houses. Banks are in the business of selling money.
Right.
They don't want your house. They want your money. They don't. Trust me when I tell you. Now, if you have, if you only owe $5,000 on your house to the bank and you decide to allow them to foreclose, they're much happier than if you decided to get foreclosed on right in the beginning of your loan, because there is more equity and they will recover their losses and they will make money on that transaction. But 9 times out of 10, when a bank forecloses on a house, they are not making money, guys. It costs a lot of money every month they have to pay taxes and insurance. Every month they have to pay maintenance and upkeep. They have to hire a real estate agent. They have to do a lot of things to get rid of the house that they supposedly wanted to foreclose on with you. So understand that, the reason behind the whole thing, it's not, the bank does not want you to foreclose. It's not in anybody's good interest to have a big string of foreclosures, especially in one area. It really hurts the economy. It hurts housing. It hurts the population. So, as Kelly said earlier, one of the big things that I want to do here with this podcast is help educate everyone. And, I know it's not easy. If you're driving to work, if you're driving home, if you're just sitting at the house, not many people are going to be dying to throw on a 20-minute real estate podcast. But if you have ever been misinformed, this is the place to come. This is where we're going to be talking about all this stuff. And also, we're going to share this on a number of different platforms, Kelly. Facebook, Instagram, YouTube, all that good stuff. We're going to be sharing this. Now, please feel free to ask us questions. We thrive on that kind of stuff. We want the interaction.
I get another question a lot. Why do I have to be in debt to have a credit score? It's not actually to be in debt. It's to see that you can pay things on time. So if you have a credit card, you don't necessarily have to have it maxed out. In fact, it's worse to have it maxed out.
Oh, God, it's terrible.
Not only does it affect your credit score, but I've seen personal relationships affected by this. Here's a funny story.
Yeah, this is good. I heard a little bit of this earlier. This is going to be good. I'm gonna kick back with my coffee here.
I was doing a consultation with a client. They were a couple, and we were going through the credit report. First off, I don't know how the wife didn't think that the husband was not going to see the information that was on there. But we're going through the credit report, and he couldn't believe how much credit card debt she had. He was shocked. Like, he got to a point, and he goes, "Are you serious?" And I go, "I'm sorry, what, sir?" And he goes, "Are you serious?" I'm like, "I don't understand the question. I don't know what you're talking about."
Generally or right now?
Yeah, exactly. And he goes, "You're saying that she has this credit card, that credit card, this credit card, and these are all maxed out?" And I said, That's what the credit report says.
I'm not saying anything. It's what the report says.
That's what the report says. And he must have looked at her and he goes, "You've got to be kidding me right now." Well, we ended the phone call rather quickly after that.
Cat's out of the bag.
Yep. And she goes, "Well, you know that." And nope. Apparently he didn't. He didn't realize how bad it was because I didn't hear from them for a few more months, and then I only heard from her, and she told me that they got a divorce after that.
Ooh.
So I was actually a witness to a breakup during a consultation.
Oh,